Hi there, this is the story of Webull, ticker symbol BULL. Right now the market cap is about $5 billion and the price $10 per share. And the most important question is whether this company is a great investment at the current valuation. And the answer, you will find it in this box. During this video, open the box and you'll find an answer. Now, to understand this company, you have to look what they do and what's next, their opportunities, their future growth. So revenue over the last 3 years, almost flat. Flat, 388 million. 22, 23, 24. First half, 25, they succeeded to increase the revenue. That's a plus. And then if you look at their earnings, down. They proceeded to report 50 million 22, then a decline in their earnings to 6 million, and then a higher loss in 24, 22 million, and for the first 6 months of 25, a decline of 15 million. Now, if you look at the total earnings attributable to shareholders, they are minus 500 million. This includes a change in the fair value. So if you ignore this, these are their real earnings. Now, is this good? Well, when you see declining earnings, yes, they might invest in acquiring more customers, expand their business, and that's why they might report a loss. Now, let's also look at the balance sheet, because maybe they have something there. If you look, cash $476 million and debt 100 million. So they are left with 376 million. Compare this amount with the current market cap, isn't that high. Now, with the revenue, if you look at the revenue and compare it with market cap, here it depends on their future growth. If you have high growth rate, even if with high growth rate, still market cap is overvalued. Now, I think you already know what this company does, Webull. It's a broker where you sell stocks, buy cryptocurrency, and trading, and all that stuff. And they say that they offer commission free. Of course, this is a lie, because yes, they offer you free commissions. No commissions, zero fees. But when you buy a company, for instance, invest in this company, pay the price $10.96. When you press that button buy, they don't sell to you at this price, but at a lower price. And that difference is their revenue. Just keep in mind when you see commission free. And if you look at their segments, you can see here, 50% of the revenue comes from payment for order flow, where they route client orders to market makers. And here they get that rebate, as I talked about before. Plus, 40% comes from interest income. Imagine this like a bank, where they offer their margin loans. 10% from stock lending and short selling fees. Here they charge a fee. And 10% from subscription, where they offer different advanced features like data. Now, this is what they do, their segments, the way they make money, like a normal broker. Here is the thing. There are, only one important indicator to look at this company. Customer assets. Because on these assets, they are able to charge fees. If they don't have an increase in their assets, they can charge fees and the revenue won't increase. Yes, you can also look at the number of users. They have 25 million, but this is not important. No, because you can have billions of users, but if their customer assets are low, they can't make money. That's why this is important, this indicator. And if you look at their customer assets, right now 16 billion, the latest report. If you assume that these assets will grow more in the future, they have the resources to increase this, to attract more investors to their platform, then yes, Webull can increase from this level. But again, the current valuation is still too high. Still too high. Now, if you do market research, for instance, if you look at Robinhood, they have over 800 billion in customer assets. And as Webull has 16 billion, there is a lot of difference. I mean, you can have more than 5x, but only if they can succeed to attract more investors to their platform. If they don't, this will be an average investment. The stock price may decline or be flat for a longer period. And still at the current revenue and current market cap, compare them, still expensive. So to open the box and show you my answer, the answer is no. This is not a great investment right now. First, high valuation, extremely overvalued. And there you have this competition. There are a lot of players out there. Not only Robinhood, but also other traditional brokers or interactive brokers, for instance. By the way, if you want 1K for free, join interactive brokers using my link from description, and you'll get 1K bonus. So, Webull, yes, they can increase their revenue more in the future, but you'll see more losses. They have to invest in marketing to attract more customers. If they follow the right strategy, maybe they can succeed, at least to double their revenue. But the earnings for sure will be with minus, and if they have more losses, be aware the number of shares can increase more in the future and you can have dilution, which again decreases the value over time. So right now, the current market cap and valuation is way overvalued. This company is not a great investment in my view. I mean, for the return I want, because if you go to my profile, check title investor, my portfolio, you'll see that my return 30% a year, annual, over the last 4 years. So this is the return I want. I don't want average. By the way, if you want to see my portfolio and have access to my future stocks, you can join this level. You also get access to an investing course, other in-depth analysis, bonus, access to the previous levels. So that's it for this video. And if you have other questions, please let me know in the comments.